Okay, everybody, welcome to Sunday's analysis of the market. We'll take a peek at what happened last week, kind of see, according to our analysis, what took place, and then we'll be looking at the monthly, the weekly, the daily, and the hourly for this upcoming week. We are here today on the 21st of December. And I'm just checking my internet connection here. I hope my internet connection is okay and not static. And going into this week, I won't be trading very much. And I'm sure, hang on one second, guys. Okay. I think that my internet is a little rough. Anyway, hopefully this is recording okay. Okay, so I'm just going to keep going. Hopefully this is recording okay. Sometimes when we have storms here, my internet connection can be a little bit quirky. So it's 2 o'clock and we're going to get started. Okay, everything seems to be looking okay. Okay, everything seems to be looking okay. Okay then, guys, and if you could just let me know in the section here if you can hear me okay, please. There we go. Okay, sorry about that, guys. When we have storms here in our small town, my internet connection can be slow. Hey, Heat Trader. Hey there, Janine. Hey, Yoda. Hey there, Janine. Hey, Yoda. Ciao. Hello from Italy. Ciao. Come sta? Okay. And then of course we have I'm not going to say your whole name, but 3968. And it's good to see you. So let's get started. And yeah, I think I'm going to do some tape reading this week live. This is a week where I normally don't trade very much, so I don't mind like just opening up a live stream and taking a look at the market with you guys. No promises on taking trades, but you know, we'll just see what happens. So let's very quickly take a look at what happened last week in terms of we looked at it, we did our analysis, and then how did the market actually play out. So as we discussed last week, we are now on a 4-hour time frame here. We have the market maker model, which is what I trade using power of 3, accumulation, manipulation, and distribution. And everything of what I use on this channel are ICT concepts. This is not financial advice. I'm not a financial planner. I'm still a student of trading. And we know that trading is high risk and you can lose money. So you do you. All right, then. So last week we established that we had the 20-day IPDA vertical line here in blue, and that is 20 days out that we look at the high and low, and that's kind of our dealing range. And if you're trading, swing trading or longer term, you'll want to look at the 20, 40, and 60 days. But here on my chart, I have the IPDA 20-day look back period. We established last week that we have a buy model, which is this side of the market maker model, and that we had the last few weeks, we had begun signs of the sell side. We established that in order to trade this type of model, we want to look to the left-hand side of the model to look for the BISIs. So the BISIs support price as price moves up to its area of interest. And on the right side of the model, we use these same BISIs to take price down. So as we're moving down, all we do is take our BISIs, slide them over, and price uses these as we come down the sell side of the model and vice versa. So I hope that kind of makes sense. So we had price come down Monday and a little bit into Tuesday, and then price started to move up. Monday was a beautiful drop in price. It was exactly what we were expecting. And I did trade Monday, and I think I took 118 points on a short. Tuesday it was quite messy. Wednesday, Thursday, and Friday, price has moved up. But let's go now to the monthly and take a look. And I've got another tip and trick to show you in TradingView this week for SMTs. So don't let me forget to show you that at the end of this video. So here we are on the monthly. And as you recall, last week, we looked at this down close candle here, this down close candle from November, and we took 50% of this wick and we drew a line across. And this is the 50%. We can see that last week price came just below this 50% and then moved right back up. So that was kind of cool to see that happen. So let's go back to the hourly for a second and we'll just take a look. And that is this line right here. This is the monthly 50% of the wick. So price came just did a mohawk below it, and then immediately price reacted and started moving back up. We know from ICT that he always has us look at the wicks, especially any of the long wicks, and we treat wicks the same way that we look at gaps. They are areas of liquidity. So that was kind of cool to see that happen last week. So here price opened, open, high, low, and then we closed here at 25,565. Other than that, I don't have much to say about the monthly. Please, enter any thoughts that you guys might have. This candle, so far this monthly candle came and swept out the wick, but it also closed below the body of the previous month. So, we can look at that and we can say, okay, well, it's a little bit of a bearish kind of feel to it. But on the other hand, when we have a wick above the body and below the body, I view that as neutral. And I'd like to hear your thoughts if you view that as neutral. But that's, to me, is a little bit indecisive. We have all-time highs up here. And that's basically it. I have put on my chart the BISI for all the months that price has been moving up. And you can see when I click on my BISI and I go to visibility, I only have it on my monthly view. I don't want to see this on my hourly chart or my minute chart because that's what I'm trading on and I don't want to clutter it up. So I've just put it down here. It's just something I keep in the back of my mind. There's really nothing else on this chart that I would have anything else to contribute. Let's go to the weekly now. Now for the weekly, we have this order block here, and this is from this down close black candle here. And if I stretched it out, this is what it would look like. I want to keep it nice and tight, so I just have it kind of abutted here against this candle, but this is an order block. So price came up. We had one down close candle, and then last week, price opened. It came down into this order block. It is just below the 50%, so if we take our fib, we can kind of take a look Let's just get the quadrants here. Here are my quadrants. And price came just below the 50% level. So that to me is interesting to watch. That shows me that price has swept into that liquidity and has come right back up. So that to me looks a little bullish, but it's something I'm keeping my eye on. The other thing that I notice on the weekly is up here. If price makes it up here, so price came down and then price came up, price came down a little bit, then we have this kind of indecisive candle here. But I've put on my chart here, this is a weekly change in the state of delivery. It hasn't happened yet, but if price gets above the weekly change in the state of delivery, then we'll be looking at, coming up to previous month high or all-time highs. So I put this on my chart, and this is something that I just refer to on a nightly basis to remind myself of on the weekly kind of where price is. And I haven't put it down here, but the change in the state of delivery would be on this black candle down here. And so that would be a change in the state of delivery to the downside. Price is between these two levels here. So again, it's just something I'm keeping in my mind as price decides or figures out, where it wants to go for the upcoming week. So, and this again, I only want to see on my weekly. I don't want to see it on the other charts. Okay, let's go now to the daily as we get more into what is really relevant this week. Okay, on the daily, so again, there is the buy side of the curve, then we had all this chatter, then we had sell side of the curve, and then we had these two green candles for the last 2 days. This down close candle here, this black candle, I have put the change in the state of delivery right here. So change in the state of delivery is to the upside. So let's just put that to the upside. I'm going to make this a little bigger so you guys can see it. So when price moved above this down close candle, this is a change in the state of delivery to the upside. This is a bullish indication that price may want to go higher. The other level that I have marked on my chart is this daily BISI. So this is from the left side of the curve, right? This is when price climbed up. If we pull that BISI across, we can see that price has closed above that daily BISI. That is another indicator that on a daily time frame, price is bullish. So I'm going to pull the daily back across and I like to keep these on my chart, but I don't like to always have them stretched out because when I'm trading, I like to focus just on the areas that are relevant to me. And I like to keep my chart super, super clean. Now up here, I'll leave this for you guys to kind of think about. We had price come down. Here is our order block, this down close candle here. Price has moved up. This is the left side of the buy curve. We had a pullback, and then price is moving up with a change in the state of delivery. So bullish, in my humble opinion. This SIBI right here is of interest to me. We have not yet come into the SIBI. Price has not come into the SIBI, but we have tapped it like 1, 2, 3, 4, 5, 6, 7 times. So this area just under the SIBI, there's been a lot of liquidity. Every time price hits this level, price has dropped. So everything inside the SIBI has not yet been touched. So I have that on my chart as an area of interest. If price comes into this area, we're obviously going to watch it to see what the reaction is. Is price going to move above it and then move for previous month high and all-time highs? Or will this SIBI be treated as a mitigation block where price touches the mitigation block and then drops? I don't know. Nobody knows what the market is going to do, but it's something that I've got on my chart and I'm watching to see, because this area just below the SIBI has been touched so many times. So that's an important area on my chart. And I have that actually on my hourly chart, but not my minute chart. You guys know that I have my big chart on the hourly. I stay mostly on the hourly, and only when price moves into a significant level on my hourly, it's only then do I move down to the 5-minute through to the 2-minute to find an entry model. And my entry model is a smart money reversal, which I won't get into today, but we'll do that on another day. The other thing that I find interesting on the daily chart, which is what I'm going to be watching, is this down close candle here. So we have open, high, low, close. If you notice that the bottom wick of this candle is a little bit below the high of this down close candle. So we have a balanced price range in here. So anything above, let me just put this a little bit thicker here so you can see it. So this area here is of interest to me because it's a balanced price range. So we'll see what happens as price gets a little closer, but just make a mental note on your chart or put a line that this is a balanced price range, which means that price may reject from here or it may not. I don't know, but it's just something that I'm bringing to your attention. So I'm not going to leave a line on my chart because it's in my mind. And that's basically it. All the candles up here have been really weak candles as it gets closer to this level up here, just a little bit south of this SIBI. So I will be watching for that. Now, in terms of price, well, price right now is at 25,578, and if we come up here just below the SIBI, we're looking at 26,136. So, you know, these are the highs once we get into the 26 through to 26,000, just shy of 700 at all-time highs. So watch carefully, see if price comes up here. It may hit this mitigation block and then, you know, come down and complete the cycle, or you know, smart money may take us up a few days before Christmas and then let the Christmas break happen. And then we see price come down and complete the sell side after Christmas or early January. I'm not here to predict the market. I'm just noting some things that I see that I am keeping an eye on. So from there, let's go down to the 4-hour. The 4-hour for me is such a beautiful view. Like, it's lower than the daily, but it gives a more broader perspective than the 1 hour. And again, I spend most of my time on the 1 hour chart. But what's interesting to me, and I've put this on my chart, is this area, the SIBI that we have on our chart, which could be a mitigation block, is definitely drawing price up. But before we get there, and we discussed this last week, the blue areas that I have on my chart are areas that price has visited in the past, that IPDA has repriced to multiple times. And I've had this on my chart. Well, I think I had it over here in November, in the beginning of November, but I continue to have this on my chart and I just keep pulling it across so long as it keeps getting retouched. So you can see here that on Monday, December 15th, we touched into that, price fell. We came back into this hourly SIBI, price fell. Where did it fall? All you have to do is pull across your BISIs from the buy side of the market, and that's exactly where price hit. And then price moves up again. And so I'll just bring this over. So when price is falling here, I'm putting my hourly SIBIs on. I only put my hourly SIBIs on, okay? I'm moving from the daily to the 1 hour to the 5 minute. Those are the time frames that I use. And since I've become very consistent with my time frames, I've had a lot more success in trading. Before, I was looking at way too many time frames and it just became analysis paralysis. Now I'm really on the 3 time frames. So if we look at this SIBI from 1, 2, 3 candles, I'll go down to the hourly here. There's our SIBI. Let me make this a little bigger for you guys to see. Okay, here's our SIBI when price dropped. I keep these levels on my chart and all I do is pull them over. Because the price has been climbing, this SIBI will either act as support or price will drop back down and this will be an area of resistance. So all I'm doing as price moves down and up is I'm putting my BISIs and SIBIs on my chart and I'm following it like a roadmap. Sometimes I think about, you know, when you go to a big hospital and they have the footprints on the floor, you know, to get you to maybe the emergency department or pediatrics or obstetrics, and they just have these big footprints and people just say, well, follow the blue footprints, you know, you'll get to obstetrics. That's how I use these hourly BISIs and SIBIs. And you can see here that I'm just following them down and up. And when they are no longer relevant, I exit. So for instance, I had this one on and I had this one on. And as price started to move up, I was just pulling my SIBIs across. As price came above it, well, this is now being used as support, right? So price comes back up into this SIBI, moves down. We've been a little bit choppy last week, but where does it end up? Above the 50% of this SIBI, and then price moves up. Now, these are no longer relevant because now we are over here with price moving up. This one is no longer relevant, so you can get rid of this one. And this one is not so relevant, so I'm just going to pull this across. But when price decides to come down, it is these BISIs that I will be using to support or reject price all the way down until we get down to these ones here, because price has not been down here before. So these are still relevant. Okay, so you can either keep those on your chart or pull them over, and then it's like a Rubik's Cube, right? You just pull them over when you need them. So that's what I'm looking at for this upcoming week. If price gets above this SIBI, then I'm going to look at price coming into this 4-hour area that we've been to multiple times. If it comes if this 4-hour area acts as support, then we can potentially look at our next area of support, which would be, you know, we've got an area here, we've got a SIBI, so we'll just put that on the chart. And then after that, we've got another one up here. And again, these are all on the hourly. So that is my framework for the upcoming week. Again, I'm not predicting price. I'm just here to read and interpret and be open to what the market is showing us. And this is what the market is showing me for this upcoming week. When I get down to when price comes into these important areas, like right here, let's just take a look at this on the 5-minute. Okay, so let's look right here. I'm going to go down to my 5-minute, and you'll notice when I get into the minutes, some of this which you are seeing on the 1-hour chart, you won't see on my minutes, because I want to be very specific with what I'm looking at when I'm trading the 1-minute or the 2-minute or the 5-minute. This is all I'm looking at when the market opens tonight. Like right here, I'm not worried about what's happening over here because we have that higher time framework now. we have that higher time framework, and you can always go back to your 1 hour or your 4 hour chart to reorient yourself in terms of, was I bullish or was I bearish? Like, but once the market opens, this right here, this circle, this is the only thing I'm interested in. This is what I'm watching. I've got my 1 hour BISIs and SIBIs here. This is irrelevant unless price comes back down here. So I'm not worried about this right now. So make this nice and small. And this one here is my hourly. And that's it. So I keep it really, really simple, guys. And so let's take a look at what Asia does today. And always remember that if price is going to go higher, it has to come lower first, right? So if price opens and then drops, that's likely an indication that London or the New York AM session, we might see a drive up. But always remember that the first move of the market is rarely the true move of the market. So, price may come down and take out some liquidity from these areas, but this is the only area that I'm watching right now. And then the next area will be this 4 hour. And if we get above here, then we're looking up here. Now, today is the 21st of December. Let's quickly look at Forex Factory for news this week. Monday, we have no news. So for me, when there's no news days, the only thing I'm interested in is the New York Open because that will provide some volatility. Tuesday, we have 8:30 news with prelim of GDP quarter over quarter. We have some orange folder events. Then 10 o'clock, consumer confidence. So Tuesday, we have a little bit of volatility. Wednesday is the 24th. I believe the markets close early, but you guys let me know in the chat here if that's your understanding. Wednesday at 8:30, we have unemployment claims for the US. And then from you guys in Italy and Southeast Asia, India, Pakistan, you might be interested, of course, in more than USD, depending on what you're trading. So you may want to look at the euro. If you're trading London, I'm not sure what you guys are looking at. So my plan for this week is, I think I'm just going to do some live tape reading with you guys. And if you're interested, we'll just watch how price reacts to some of these areas that we have discussed today. And no big deal. It's, there's going to be very little volume in the market. I'm not anticipating great price action before Christmas. And it's kind of like a nice time to take a step back, reflect on your trading from 2025, and then create some of your goals for 2026. I can tell you that I have one goal for 2026, and that is psychology. And I have spent all day today going through some literature on psychology. Uh, I have my trading strategy. It works super well. I know it. I understand it. I see it when it happens. That to me is like the easiest part. But the psychology for me is something that I'm focused on this year, and I'm really looking forward to seeing the results from that. I do want to show you one really awesome shortcut. If you guys are using your SMTs, now I have an SMT indicator that I use. So I think you guys are using an SMT indicator. You can get them free from TradingView. I have mine as part of a package from Cronus, and I have 4 indicators from him, but you can get it for free. But I want to show you something, a little shortcut. I'm not sure if you guys are aware of this, but this is really, really fun to use. So you can see here that I'm on Micro E-mini NASDAQ. This is the new contract from 2026. Now, let's say that I want to, normally I have like ES over here. And then when you have an SMT, this kind of takes most of the work off the table for you, right? Because I have the weekly, the monthly, the daily, the hourly, and the minute. But here's something else that you can use just to give you like a different perspective of the market if you want to try something new. And sometimes I do use this. So we're on the 5-minute here, and all you have to do is you go up to this plus sign. See where my mouse is? Go up to this plus sign here and click on whatever indice or Forex contract that you trade, which would be the opposing indice. So for me, I have NASDAQ up here, but let's say I want to compare and look at the SMTs from ES. So all I do is I click on this button over here, this plus button, and I go to micro, E-mini, S&P. I want the 2006. Now, when you put your mouse here, you're going to get 3 options. It's going to say same percent scale, new price scale, or new pane. I will show you these last 2. I don't like this one, the same percent, but I'll show you what it does. I'll take you through it. But let's go to the new price scale. So when you click here, you can see that the ES goes right on your chart. Okay. So if you don't like to have these SMT indicators and you just want maybe a different perspective, I'll just take that off so we can see everything here. You can see that now you have ES and NQ on your chart, and it can be fairly easy, especially on the low time frames, to identify your SMT. So let me look for an example. Now what I've done is you can click on your ES here and you can change the color of your candles to anything that you want. So I don't want black and green because I'll get confused with NQ, especially when you're moving your chart. So I've switched my, I've switched the bottom one to maybe blue. Borders, this one, and then the wick, I always like black. So this way you're not going to get them mixed up. You're going to know that your green here is your NQ and your blue down here, or whatever color you prefer, is your ES. Okay, now I just want to show you how easy it is. Hey, greetings from California. Pretty nice. You don't even want to know the weather we're having here. I want to show you how easy it is to find an SMT when you have these 2 embedded. And when you put your cursor over a candle on NQ, you can see that it runs vertically down and gives you the exact candle on ES. So it's super, super easy to see when there is an SMT. So let me just find one quickly here for you guys. Right here. Let me just go back. Okay, here's one here. So let me put a vertical line in so you can see it. So let's look at this one. So this candle here, I'll just move this, make this bigger. This candle here makes a low on NQ. Okay, it makes a low on NQ. And on ES, this candle makes the low. So we have an SMT. See if I can even find a better example. Here's a better example. Let's go. Here we go. So this is a low, and we've taken out these lows. SMT. And then on ES, we have this candle. And you can see that it did not take out that low. ES did not take out that low, and that gives us an SMT on the 5 minutes. Okay. So this is a nice, easy way to put your NQ and ES or whatever two contracts that you're trading on the same chart. Now, I just want to show you how to take it off. You just go to where the indicators are on your chart and you can remove it or you can hide it. Now, I want to show you, I'm going to take this off and I want to show you what the other options do. So you can view them in different ways. So here we are. I've clicked on this plus button here and you can put it on new pane. So let's click new pane. Now you can see that instead of having NQ and ES overlap each other, they're actually on their own pane. So here's the pane that you can move up and down. And it kind of separates it into two horizontal areas. So they're not so close to each other. They work the exact same way. Okay, so when you put your cursor over top, it's going to show you both of the same candles. Okay, so that is new pane. And then to get rid of this, you can go over here to the right where my mouse is and you can click on trash and it takes it away. And I just want to show you the third one that I don't like, but you know what? Maybe you guys like it. And it's called the same percent scale. So if I click that, you can see that here on the right-hand side of your chart, your prices disappear, and instead you get percentages of the ES to NQ. And they're hard to pull around. So I don't like that one. I prefer the first two that I showed you, but you know what? You can experiment with it and find out what you like. So again, if you want to get rid of it, go back up to here where your list of indicators are, and you can get rid of it just like that. So that's it. I just wanted to show you guys that instead of having the SMTs lines on your chart all the time, if you want to really kind of micro down and look for those SMTs on the 1 minute, 2 minute, or 3 minute, if you have them embedded on the same chart, that might be something that that you enjoy using. Okay, any questions today? I just want to keep this super quick and brief since it is the week of Christmas, but any questions? Hi, Tony from Northern California. Good to have you guys here. 3968 from Pakistan, Janine from the States, Heat Trader from Miami. Who else is here? Yoda from Italy, my favorite country in the whole wide world. Okay, any questions, guys? Any thoughts about this upcoming week? Can you guys put a 1 in the chat if you intend on trading, and put a 2 in the chat if you're open to maybe just doing some live tape reading with me this week? Tony, really good question. The question is, do I note the first fair value gap after 9:30? Yes, I do. And let me show you how I note that. Just give me 1 second here. Now, I have a suite of 4 indicators that I purchase on a monthly basis from Cronus. It's like, here you can find his name up here, Cronus. It's $20, but you get all 4. And as part of my suite, if I were to open this up here, this gives me everything that I need on my chart. Let me just take the SMTs off so that it's a little clearer for you guys to see. Let me take the SMT off here. So you can see that on my chart, I have all my levels. I have monthly open, AM high, PM high, weekly open, previous day high, AM low, Asia low, previous day low. These are all what I pay for as part of my indicator. And if I go to the 1 minute, I automatically get that fair value gap on my chart. I have spent 3+ years doing all my ranges every single day, updating them every single night. And I just feel like where I am with my trading now, I've treated myself to this suite of levels that every time I come to my chart is updated. And I want to show you something super cool with the suite is, let's say I go to the 15 minutes. You can see that on my chart, I have, second here, I'm going to open this one up. On my chart, you can see that I have the morning session and the afternoon session and the Asia session. So I have sessions that are blocked out. So let's say I wanted to trade the afternoon session. The high and the low of the afternoon session are on my chart automatically. So I'm not looking for the highs and lows of the afternoon session. So how that is helpful to me is, let's say I want to trade the afternoon session and I think that liquidity from the morning session might be something that price wants to go for. Well, I already have the morning high and low. So I don't have to spend a lot of time looking for my previous high and lows. They're already on my chart. I think that last week, that first presented fair value gap worked beautifully. And I'd like to hear from you guys if any of you trade the first fair value gap strategy by ICT, because I find it's very relevant. I know I like to stay away from indicators too, Tony, but after 3.5 years of honestly, marking out all the levels myself, I just feel like, I want to make my life a little bit easier, and I've automated it, and $20 a month isn't going to break my bank. So if you go to Cronus here, if you guys want to take like just a screenshot, go to Cronus, Kronos, super nice guy. And he does updates. And when he updates his indicators, he does them in the evening so that it doesn't disrupt from New York trading. And I would say at least 2 or 3 times a month, he's making improvements to them. And this is my second month in using his indicators, and I love it. I feel very spoiled. I wouldn't go back to not having indicators because he just makes it super easy. And then all I'm adding on my charts are my hourly SIBIs, BISIs, and that's it. That's all I'm adding on my charts, and everything else, my Asias, my afternoon sessions, my morning sessions, everything is here, and it's just made life so much easier. Next question. Do I focus on the 130 fair value gap? Tony, I don't, because I don't like trading the afternoon session. I prefer to trade the morning session of New York. And I have really pared down what I trade now. I like to trade London and I like to trade New York AM session. And those are the 2 sessions that I trade. I've just never liked the afternoon session. I don't know, I guess everyone has their kind of favorites, right? But I am cutting down on my trading. I'm not looking at increasing my trading in the new year. Next question from 3968. When trading the New York session 9:30, how do you confirm if the trade should be a continuation or reversal? I struggle with finding internal base bias. Okay, so I think a lot of traders struggle with that. We have just gone through the higher time frame analysis. And so I start the week with at least some idea. And the idea that we should be taking away from today, and let me just go back to the daily here, is that the daily is showing us that we are bullish, okay? We have already had a change in the state of delivery on the daily with this candle above it. That tells us that price is pushing up. So that is number 1, okay? On the higher time frame, does it look like price is moving up? And if price looks as though it's moving up, where is your point of interest? Where is liquidity on the larger time frame that you think IPDA wants to bring price to. And we discussed here that this possibly a mitigation block, is an area of interest. And let me go back to the 4 hours so you can see right here. This takes us back up to 26,200, somewhere around there, 26,150. So that's on my mind tonight when the market opens. Okay. Now, there's no guarantee. We could open today at Sunday at 6 p.m. and price just drops all the way down. But my framework at this time is that we are bullish. We've had a change in the state of delivery. Until that changes, I'm going to be looking for buys early in the week. Although, again, I want to stress that I'm not really trading this week because it's just not a great week to trade a few days before Christmas. There's usually not much volume in the market, but anyway. And then what I'm doing every day when I open the chart or when I'm looking at London to see what happens in London, I'm staying on the 1 hour and I want to see how each level affects price. If price comes down tonight and shows weakness and falls back into this BISI, well, when price opens in the morning, I'm going to be watching to see, okay, is this just a pullback with price then wanting to go higher, or is price going to continue lower? If it's going to continue lower, this BISI will act as resistance, right? If price moves below here and then continues to drop, then the next area that I'm looking to is this area. So I'm always looking for these sort of stepping stones on the hourly. Now, some people, if you're scalping, you have different time ranges that you're looking at, but I'm a day trader, so I'm looking at the daily, the hourly, and the 5-minute. That's what I'm looking at. I can show you a very quick example of an entry. And I think I took it, but let me show you very, very, very quickly what I mean by that. Heat trader, I don't trade the New York PM session either. I don't know why. I just have losses in the afternoon, and I want to end my day positively, not with a loss. But let me just quickly show you what I mean when I say when price enters a point of interest. This hourly SIBI here is a point of interest. And when price came up and hit this point of interest, I now am going to move from the hourly down to the 5-minute. And I am looking for a potential entry. And let me show you just quickly what that looks like. So I would move down to the 5-minute. So we're over here, right? Here's our 5-minute. Would IPDA repricing area be considered relative highs? Yes, absolutely, Janine. So previous highs and lows. That's why you should have all the previous highs and lows on your chart. Okay, so here we are now on the 5-minute chart, and here is our hourly SIBI. So when price moves into this hourly SIBI, I'm moving down to my 5-minute chart, and I'm looking for a potential entry. I'm going to go over this super, super quickly, and if you want to know what my exact trading strategy is, it's in the discussion area of every video that I do. It's in every single one. So here we are. First of all, I'm looking for time because I only trade the macros. Here we have price hit a high right here, this green up close candle, and we see that price moves down beautifully, displacement. The time is 7:50, so that's inside my macro. So let me write this down for you guys, just so it's super, super clear. So first of all, I'm looking for higher time frame liquidity. It came into the hourly. That's higher time frame liquidity. Number two, I'm waiting for time. I'm waiting for my macro. Are we inside time? Well, if we look at this candle, the candle is at 7:50. That is Wednesday morning. And what is my macro? My macro is XX45. to XX15 of every hour. So that's a check, check. Next thing I want to see displacement. Do we have displacement? Well, we have, here's our high, here's our green candle high. Then we have 1, 2, 3, 4 beautiful displacements, strong candles down, right? Nice, big, strong candles down. So that's displacement. Number 4, I'm looking for a change in the state of delivery. So what is the change in the state of delivery? If this is the last candle up, I am looking for the series of candles that led to this final push. And that would be this black candle, but I actually prefer this one here. And this is just, I would put it down to experience on the charts. There is my change in the state of delivery. Let me make this bigger for you guys. Here we go. Change in the state of delivery. Next, I'm going to be looking for a fair value gap plus an inverted on the opposing leg, and that would be a balanced price range. Let's see if we can find that. I have a fair value gap here, and on the opposing leg, I want to see an inverted fair value gap. Now, I don't have a very clear inverted fair value gap, so what I would do is I would go down to the 3-minute and then the 2-minute until I found that inverted fair value gap. Let's suppose it's in around here. This is my inverted fair value gap. When we have an inverted fair value gap and a fair value gap, we have a balanced price range. And then what I'm looking for is a breaker block. So let's take a look for our breaker block. We have a high, low, higher high, lower low. So we have a breaker block. And it's bearish. The one thing that I really want to see is an SMT. So this took out the high, but on ES may not have taken out the high. So you have to look on ES for that SMT. The change in the state of delivery comes first. First, we look for the change in the state of delivery, then we need to see the SMT. I have everything else on this trade. Now let's look at where you could enter, where your stop loss would go. So let me put in the bearish order block. So high, low, higher high, lower low. So between the high and the low, here is our breaker right here. And this is a bearish breaker. This black line here is our bearish breaker. So we have our inverted fair value gap, our fair value gap, and a bearish breaker. That's all I need to enter the trade. Now, I'll show you the different areas that you could have entered this trade. You do not have to be the first person in the trade. You know, there's this idea of this rush, this feeling that I'm going to miss the trade, but that's not true at all, because once we start into a sell program, there's going to be many, many areas to enter the trade. So let's go through every single area that you could enter this trade. So first of all, here's my displacement down. Now I'm waiting for price to come back up into the fair value gap or the breaker or the inverse fair value gap, one of them. Here would be an entry. Here's an entry. You could even enter here, but this is a little premature. I like to wait for price to come back up. It just, for me, it's a little bit of extra safety there. So that would be like entry number 1. Now we're going to look for the next entry. Well, all we're going to do is we are going to add our SIBIs all the way down. So price drops, comes back into the SIBI. Boom. If you didn't get in up there, you get in down here. Let's look for the next SIBI. Here, to here. Now this one, not such a great entry on the 5-minute, but you could drop down to the 2-minute if you wanted to find more entries, okay? So this one is still, I'm on the 5-minute, but I do like to trade on the 5-minute. There's no exact entry, but what do we have here? We have really long, strong candles moving down, okay? This is showing you the willingness of price to move down. Now, where's our next SIBI? Right here. Again, at this point, price is moving pretty fast, but if you drop down into the 2-minute or 3-minute, you'll get an entry. But here, you could take any of these entries here. And then what does price do? It keeps dropping. This one here, let me just see what this is. Here's our next SIBI. Here's our next SIBI. You can enter in any of these SIBIs. Let's see where the next one is. Here's where price starts cooling down. So I wouldn't want to enter like way down here. You know, if you're not in the first 25% of price dropping, you know, you don't want to wait till down here because then your risking price might turn around, right? Price is only going to drop so far. So these are all entries. And if we just for fun, let's move down to the 2-minute. Let's just quickly move down to the 2-minute and see how many more entries there are on the 2-minute. So here's your entries on the 2-minute. There's just more of them, right? So here we have 1, 2, 3, 4, 5 entries here. Here's our entry here. Entry here stays the same. We actually have another entry here. It's another fair value SIBI. Let's just take this one out. And so on and so forth, moving down. And that's my model, and I use it every single day. So I stay on the hourly chart until price moves into an area of interest for me, and then I drill down to the 5-minute, and this is what I'm looking for. And it's a checkbox for me. I need to check all these things. If anything is missing, it's a lower probability. Again, you don't have to be the first one in. You don't have to get in up here. Okay, if this is too high risk for you, you don't need to get in. You could wait for distribution here, second distribution here. You know, I'd be a little afraid of getting in down here because price has dropped a whole lot. So, you know, and then all we're doing is then we get into accumulation, right? This is all accumulation overnight. And then what happens? London starts to climb. And then we're into a buy program over here. And that's all we're doing, right? That's it. So I stay on the 1 hour until price hits an area of interest. So all I'm looking for tomorrow or tonight when the market opens, I'm looking to see what's going to happen. So that was a long answer for your question, 3968, but I hope this helps that you don't need to know 100% if the market is going up or down. Put your hourly BISIs and SIBIs on your chart, and then as price climbs into each one, look and see, is that SIBI or BISI, is it support or is it resistance? You have to look and see how is price reacting in each major levels. And if you stick to the hourly levels, those are good, strong levels, right? If, you know, before when I was a much less experienced trader, I'd be on the 15 minutes or, you know, the lower time frames, and they, you know, they'll just fool you, right? But it's the higher time frames that when you get a move down, you'll get a good move. You know, the price will move 100 to 200 points, and you only need 30, 40 points in that 200 point. You don't need to get the beginning, you don't need to get the end. You just need to get like a little chunk in the middle. We're not greedy, right? Janine, are you trading this as a market model sell? Would entry correspond to fair value gaps at the previous buy model? Yes, Janine. So technically we are on the sell side of the curve, but price is bullish, right? It is bullish on, let's go back to the daily. We have a change in the state of delivery. right? Price came down, and as soon as price moved above here, we've had a change in the state of delivery. That tells us we're bullish. Now that could change when the market opens at 6 p.m. It could come all the way down and come below the change in the state of delivery. But for right here and now, on the higher time frame, we are bullish. But we are technically in the sell side of the market maker model. But also note that price is fractal, right? Price is fractal. So if you move down to the 15-minute or the 5-minute, you have buy sell programs and sell side programs inside those programs, right? So we need to define, I need to define for you guys that on the daily, the hour, and the 5-minute, we are on the sell side of the market maker model, but we are currently in a bullish trend. So I hope that helps. Heat trader, why do I only trade the macros? So after I finished studying ICT, I took a mentorship with Zeussy. Let me just write his name down here. Zeussy, and you can find him on YouTube. And I entered his mentorship for 3 months and I learned a ton. And so I really learned how to use time first, then price. Time has to be first. And when you align on an y-axis and an x-axis, time and price, when those two intersect with each other, the probability of a trade working out is much, much higher. So even though this setup may come outside of a macro time, I don't trade it. I'm waiting for time and price. And if you're curious about Zeussy, he's just put all his information for public use on YouTube. And then his partner's name is JME. And you can follow him. And if you look on YouTube for JME or Zeussy, they have their explanation of why time and price is such a strong, strong, strong method of trading. And if you think about ICT, when he talks about silver bullet, right? ICT's time was always 10 to the hour and 10 past the hour, but JME and Zeussy have increased that to 15 minutes before and 15 minutes after. So that's why I trade that. I took a 3-month mentorship. I learned a lot. And now I've just taken this model and refined it and refined it and refined it. And when price and time intersect, with time being the most important, the odds of the trade working out are much higher. And you don't need to take my word for it. You can just go back through the charts and take a look at those time frames. Heat trader, do you only enter exit trades during macro or only enter them? So good question. I want to present one other thing. So the macro time for me is XX45 to XX15. Now here is one thing to consider. If there is clear manipulation before this time frame, then we can take the trade 3 minutes before XX45. So if there's clear, accumulation overnight, if you see that manipulation happen at 8:42, then we can take the trade 3 minutes before the macro starts. But it has to be clear sweep, a clear liquidity purge. What I have found is that when my trades, let's say I enter a trade at 10 o'clock, because I like to wait for the 4-hour candle. But let's say I take the trade at 10 o'clock. What I find is that when the macro starts to come to its conclusion at XX15, price distortion can start happening. So what I'll often do is exit the trade, and then if I think that the trade is worth entering again at 10:45, I'll re-enter. But I usually I see that price action starts to wane a little bit once the macro finishes, and I don't want to stay in a trade during price distortion. I kind of want to get in, I want to get my trade, and I want to get out. So I hope that answers your question here. Let me just see with some of the other questions, and then we better wrap it up. It's 3:03. XMT89, when taking a trade in NQ, do you ever look at SMT with YM? Thank you. Excellent question. Let me show you what I have. One second here. I have a chart set up with all three. And before I take a trade, I like to see all three running in the same direction. I have to update these tonight, but I will take a trade so long as NQ and ES are, if I have an SMT between NQ and ES, I find that stronger than if there's an SMT between NQ and YM. I just find that YM can sometimes be off doing its own thing and it doesn't really affect NQ. But it's something definitely you should be looking for. But I like, so I have this open in the morning, and I like to see that price is moving in the same direction across all three indices. That provides a much higher opportunity for a successful trade. Janine, I watched some JME videos today. Sometimes they add only the XX and sometimes they add, yeah, it doesn't matter. Wondering when to add all the numbers. Oh, you mean the 369? Is that what you mean, Janine? Are you talking about the 369 Confluence? Because that's totally different than the XXXX. I'm moving on to the next question while I'm waiting for Janine. 3968, last question from my side. On which day should we expect the weekly live sessions? Well, you know what? I think I'll this week, because I'm not really seriously trading. I think what I'll do is just send out an invite Monday, Tuesday. What's the date today? Monday, Tuesday, 22. I'll probably do that for 3 days, probably the morning. I'm not going to stay on all day. Like, let's just take a look at the morning because that's normally what I trade. So I think I'll open up the trade or the session at, say, about 9:25, because we've talked about the market. We've established we're looking for potentially a long tomorrow. So I'll open up the live session at 9:25. That works for everybody. Janine, you're talking about the 369. I don't want to confuse anyone on here, but I'll quickly. So Janine, the macro time frame is totally different than the 369. That is totally different. It's a totally different thing. So let me just show you here, guys. Zeussy has this theory that 369 are points on the chart where the swing highs and swing lows form. Okay, you can go to his YouTube site, you can look up the videos, you can watch it, and you can form your own opinion. I use it as a confluence. I would not say that I'm taking any trade anytime soon because the low forms on a 9. So how it works, Janine, is that let's say we have a candle that forms at 10:08. No, I want to go outside the macro time. Let's say we have a candle that forms at 12:30, 12:30. Okay, so what you do is you take 12:30 and you add up the numbers. So it's 2 plus 1, 2 plus 1. Let me just do this. Sorry, guys. Like, honestly, if you're that interested, I just don't think it's a big deal, but Zeussy seems to think it's a big deal, but like, whatever. So it's 2 plus 1 plus 3 equals 3, 4, 5, 6. So that swing high or swing low of that candle, because it's a 6, that the theory is that that would be a high. Now, let me just show you what that looks like. Now, for a while there, I was adding up all the times to find the 369, but I just can't be bothered to do that, to be honest. So now I'm just going to click on my 369 time here by Cronus, which is part of my $20 package. And you can see on my chart, and I took it off because I didn't want to confuse you guys, okay? Because, we were just doing our charts today. But can you guys see that at 1800 hours, this candle formed, and then above there we have a 9? Okay, so the theory is that this makes the high and then price would drop. Now, in this particular case, the high is actually up here, which was 1800 hours. If you add 8 plus 9, you get a 9. Down here, let's just find another time. Just find a 3 or a 6. Let's go down to the 5-minute time frame because then you can see how busy your chart gets. So my personal opinion, Janine, is that if you are so dialed in and you have your model and it's working for you and you're kind of in that stage of trading, go ahead and watch the videos on 369. If you don't even have your model yet, if you haven't found something that's working for you with consistency, honestly, I wouldn't prioritize this. In fact, there are many times in the morning session, I just turn this off because it's distracting. I look at it more as theoretically, it's interesting. Do I put a lot of weight behind it? No, I don't. And if you ask any other trader who's gone through Zeussy's program, you're going to get mixed thoughts on it too. Okay, so that's what 369 is, Janine, in a nutshell. It has nothing to do with the macro time. The macro time is 15 minutes before the hour to 15 minutes after the hour. Unless you have clear manipulation and a purge of liquidity, then you can enter 3 minutes early. That's what the 369 is. Key trader, do you use the 369 on the DTF or any time frame? Any time frame. You can use it on any time frame. Again, go to Zeussy's or JME's YouTube channel, and I think they have like an explanation on it. You can, come to your own conclusion on it. Look, if I have a sweep in a higher time frame with an inverted fair value gap, plus a fair value gap, plus a change in the state of delivery, plus a breaker block and an SMT, I couldn't care less if I have a 3, 6, or 9 at all, right? Because at that point, if you're looking for 9 things before you take a trade, you're never taking a trade. It's curious to watch. It's curious to watch, but anyway, that's just my personal opinion. So, okay then. So, guys, that's it. Thanks so much for joining, and curious to see where price goes this week. And I'm always curious to watch price. I'll send out just a little thing for tomorrow at 9:25, and let's just, for the next 3 days anyway before Christmas. I'll just do some tape reading with you guys if you're interested, and let's just see what happens. And then at least if my model comes up, you'll get to see it like in real time, and I'll go through it in real time. Because there's nothing better when the market is open and things are moving, right? It's easier to see it in hindsight, but when the market opens and things are moving, it's kind of nice to see it show up. So anyway, okay, guys, have an awesome, awesome evening, and I'll see you tomorrow morning for those that can make it. Thanks for joining today. Don't forget to like, subscribe, and share, please, and leave comments because that really helps my algorithm. Okay, guys, peace out. We'll see you tomorrow. Bye for now.